You know how most trading systems chase signals: indicators, crossovers, oscillators, arrows flashing up, arrows flashing down. You watch them intently, waiting, hoping. But here's the cold, hard truth. The market doesn't care about those. What matters is structure. What matters is reading chaos and extracting order. If you depend on signals, you're always one step behind. Today, I want you to see the invisible architecture underneath every move, to see the blueprint in the chaos, to trade from mastery, not reaction. Let's begin by remembering that the market is wild. It's a river, not a ruler. It surges, it rages, it floods. If you draw lines, if you force order, the river will find ways to tear them down. Chaos is the default. Structure is the rare exception. Your job, if you dare, is to see when chaos gives way to structure and to act while that structure is still forming. Now lean in with me. Imagine you're in the cockpit of a storm. Lightning flashes, wind howls, instruments confuse you. That's trading without understanding structure. Constant noise, constant second guessing. But then a moment comes. The clouds part, the wind steadies, you see the horizon. That moment, that window is where structure takes control. And that's where you strike. What separates the rebel trader from the herd is not their indicators. It's their ability to see the bones beneath the flesh. It's their ability to let chaos live, but only until structure emerges, and then to act decisively. That's what we'll dig into now. How to sense structure in chaos. How to pivot your mind from reactive to anticipatory. How to be ready even before the chart signals you. Here's a question I want you to talk back to me. Have you ever stared at a chart for hours, watching every candle, every wick, waiting for a signal, only to catch yourself jumping in too late or being shaken out before the signal even got confirmed? You're not alone. Most traders succumb to noise because they don't understand that beneath the noise, markets pulse with structure. That's what we're doing together, pulling aside the veil. So here's how you must think. Chaos always attempts to dominate, and structure always attempts to assert. You will see long runs of vertical movement, erratic swings, false breaks, whipsaws. That's chaos dancing. But when structure emerges, it does so like an island in a storm. Clean highs and lows, periodic retracements, neat zones of reaction. Your job, don't force signals. Feel for structure. Sense when chaos yields. Let me take you through a live mind exercise. I'm looking at a blank chart. Price moves up, then collapses. Moves up again, collapses. No clear direction. That's pure chaos. No trend, no structure, nothing you can reliably trade. If you force a signal, you'll lose. Now watch. Price swings up, retraces, doesn't fully retrace, then resumes upward. But this time the retracement holds within a certain zone, and the higher low forms cleanly, and price doesn't break the prior low. That is structure forming. It's small, fragile, but it's there. You don't need a flashing arrow. You just see that the lows are stepping higher, that price is respecting certain zones, that momentum pushes without overextending. That moment, that baby structure, is your window. If you try to force entry when chaos still dominates, you'll bleed. So wait, be patient. Let structure start whispering, then act. The rule of impulse. When structure emerges, the next move is already being crafted. Now let's get conversational. I want you to imagine your own chart. Think of the last session you lost money. What did you see? You probably thought, the entry was there, or I missed the move. But I'll bet you something. At that moment, structure was weak or non-existent. You followed a signal in chaos. If instead you were able to see that price was still fighting disorder, you would have stood aside. If you'd waited for structure to assert, you might have avoided that blow. When structure rules, your signals are meaningless. When chaos rules, even the best signals betray you. But when structure starts to emerge, it's like the market hands you a blueprint. If you know how to read it, and that's your advantage. That's your edge. So now I want you to reflect with me. How often do you enter into trades before you see structure? What internal voice tells you, this signal looks good, let me jump in? You must retrain that voice. Make it whisper. Wait for structure first. Let that be your new reflex. Let me give you a metaphor. You're lost in a jungle. Signal chasing is like relying on random footprints. You follow them, hoping they lead you to safety, but they often mislead. Structure is like a riverbed. If you find the riverbed, you know where the flow goes. You don't need footprints, you follow the water. When you find that riverbed of structure, price will flow along it. You don't fight the current, you move with it. So, how do you sense the birth of structure? You watch for the transition. Increased momentum, more orderly candles, less noise, acceptance of a zone, price repeatedly touches it but holds, the formation of swing space, areas where price can breathe without violation, a clean reaction, not a messy retest, a door opening. That's structure beginning to speak. I want you to audibly answer this. Have you ever hesitated at that door? You saw price pull back to a zone, almost hold, then drop through. That's structure failing. Or price moves cleanly through and you regret not entering. That's structure succeeding, and you weren't ready. You must train your senses to be ready at the door. Now I'm going to walk you through a pattern you'll see again and again. Price rallies, then retraces. But on the retrace, it touches a midpoint zone, holds, and then continues. That zone becomes your springboard. Then price makes a new high, but not too far. Then another reaction, finding support higher than before. That sequence, impulse, retracement, acceptance, continuation, is structure emerging from chaos. You don't need a signal, you just need to see it. Picture now your trading mindset. Before, you wait for an indicator to tell you. Now, you wait for structure to be born. You shift from passive to anticipatory. You become the reader, not the follower. You sit like a sculptor, carving only when the shape reveals itself. And because you do this, when price breaks the prior swing low or swing high in a clean way after structure, your trade isn't a guess, it's an execution of architecture. You don't pray it works, you know you entered off structure. So I want to pause and let you breathe with me. In your mind, replay your last losing trade. See where structure was weak. See how you forced yourself into it. Let that memory teach you. Don't curse your past. Thank it. Because every mistake is a lesson in structure. Now lean forward. I want to ask you, will you commit from here on to letting structure lead? Will you trade only when chaos yields? Because the blueprint of market structure demands nothing less. If you let structure guide you, you won't be trailing signals. You will be ahead of them. Keep this thought. Chaos whispers, structure commands. Train your senses so structure becomes louder than noise. That's how you read the blueprint. That's how you trade without signals. You see, the market doesn't repeat itself perfectly, but it does rhyme with frightening consistency. What you're really witnessing when you stare at a chart isn't randomness, it's recurrence disguised as chaos. Patterns reappear not because the market is predictable, but because human behavior is. Every cycle of greed and fear writes its own signature in price action. And if you learn to read that signature, you begin to see something extraordinary, an underlying rhythm that ties together every so-called random move. Think about it. Every impulsive move creates an equal and opposite reactive phase. Every expansion demands a correction. Every liquidity grab is followed by displacement. The market is a living ecosystem built on balance and imbalance. Once you start recognizing this recurrence, you stop reacting and start remembering. You remember that what you're seeing has been here before. The names, instruments, and timeframes may differ, but the underlying structure is identical. Now, traders love to call these things patterns, head and shoulders, double tops, order blocks. But what's really happening beneath those shapes isn't geometry. It's psychology, repeating. The collective fear of missing out, the rush for liquidity. The trap set by large institutions that understand these emotions better than the traders themselves. The pattern isn't in the candles, it's in the people behind them. That's why so many traders fail when they try to copy patterns blindly. They mistake appearance for essence. They memorize formations without understanding their structural cause. They think if the market looks like it did last time, it must do the same thing again. But that's not how recurrence works. Recurrence isn't about visual repetition. It's about contextual rhythm. The same event only produces the same result when the internal structure, the participants, their intentions, and their positioning mirror that of the past. Let's make it practical. Suppose price breaks a previous high. Most traders see a breakout and jump in, expecting continuation. But what's really recurring here? Historically, price breaks old highs not to reward early entries, but to punish them. Why? Because that's where liquidity lies. Stop losses, buy stops, and emotional entries. So what's recurring isn't the breakout pattern, it's the trap. It's the behavioral sequence that leads to it. Once you internalize this, you begin to look at charts differently. You stop looking for shapes and start studying the storyline. You ask, what is the market trying to accomplish here? Who's trapped? Who's in control? Where is the pain point? And the more you do this, the clearer the recurring logic becomes. The market's behavior stops feeling mysterious. It starts feeling inevitable. You'll begin to notice how price compresses before expansion, how accumulation precedes displacement, how liquidity is always taken before direction is chosen. These are not coincidences. They are recurring processes, part of the architecture of price itself. Each move writes a new line of an ancient script, and if you learn to read it, you can tell what the next sentence might be before it's written. But here's where most traders miss it. They confuse recurrence with predictability. They think if they recognize a pattern, they can predict what comes next. No, the rebel understands that recognition isn't prediction, it's preparation. When you identify a recurring structure, you don't predict its outcome. You align yourself with its probability. You become structurally aware, not emotionally reactive. Every recurring pattern carries a probabilistic weight, a historical footprint that suggests what's likely to unfold next. The difference between the old trader and the rebel is that the old trader trades patterns, while the rebel trades probabilities within structure. The pattern is only the shell. The structure, the sequence of liquidity, displacement, and imbalance, is the substance. That's the truth the market never tells you directly. The market's job isn't to reward recognition, it's to test conviction. It knows that most traders, the moment they see a familiar setup, will rush to act. But the disciplined observer, what I call the structural mind, waits. He observes the recurrence, measures its rhythm, confirms its alignment with the broader flow, and then engages. Because he knows the market loves to echo the past, but never without distortion. Now imagine this. A trader looks at a series of rising lows and thinks, this is an uptrend. Another sees the same chart and says, this is engineered liquidity before the drop. Both are right in their logic, but only one has context. Context is the key that unlocks recurrence. Without it, every pattern is a trap. With it, every move becomes a message. You begin to realize that the market isn't giving you patterns, it's testing your perception. Every chart is asking you the same question. Can you see me without emotion? Can you trace my rhythm without chasing my candles? When you can answer yes, you've crossed a threshold few traders ever reach. Recurrence becomes your compass. You start to feel the pulse of the market, its expansions, contractions, traps, and releases. You recognize that what feels like chaos to others is just unrecognized rhythm. You can anticipate when a range is about to break, not because you know, but because you sense the tension has matured. You can hold through noise because you've seen the same movie before, and you know how it ends. The old system of trading taught you to memorize setups. The new system, the rebel system, teaches you to read sequences. The difference is everything. Memorization is mechanical. Reading is interpretive. Memorization dies when context changes. Interpretation adapts. The market evolves, but structure remains constant in principle. That's why the rebel doesn't chase new indicators. He studies old behaviors. He knows that to master recurrence is to master rhythm. And to master rhythm is to trade with the flow of human psychology itself. Let's bring this closer to reality. Have you ever noticed how a fake-out candle always feels the same emotionally? That sudden rush, that panic, that hesitation before reversal. It's not a new emotion, it's a recurring experience. The structure creates emotion, and emotion confirms structure. Every trap is built on human response, not market magic. Once you understand this, you stop being the trapped. You start being the observer of the trapped. The market doesn't hide its patterns, it hides them in plain sight, inside the noise, inside the emotion, inside the repetition of human error. And because 90% of traders never evolve past reaction, the same traps keep working decade after decade. That's the cruel beauty of recurrence. It feeds on the untransformed mind. But for the rebel, recurrence becomes revelation. You start to see through the facade. You no longer need signals or indicators to confirm what's obvious to structure. You can feel the intention of price before it speaks. You trade not from hope, but from structural awareness. And the more you align with that, the less the market feels like a battlefield and the more it feels like a conversation. Every liquidity sweep, every displacement, every fake breakout, they're all lines of dialogue between order and chaos. Your job isn't to control the dialogue, but to interpret it. And in that interpretation lies the blueprint, the true map of recurrence that connects every movement the market has ever made. So next time you open your chart and see a setup forming, don't rush to act. Step back and ask, what am I seeing again? Because the market is never doing something new. It's only revealing another form of something ancient, something that has been repeating since the first trade was placed. The recurring pattern isn't your entry, it's your education. It's the structure reminding you that the future will always echo the past, not because of price, but because of people. And the trader who learns that rhythm doesn't just survive the market, he becomes part of its design. There's a moment right before every major move when the market feels eerily still. The candles tighten, the volume fades, and traders start guessing, up or down, buy or sell, right now or wait. That moment isn't random. It's a structural heartbeat, the prelude to probability. Probability isn't prediction. It's the measured rhythm of possibility. And inside the market, probabilities aren't evenly distributed. They cluster in zones. Zones where imbalance builds, where liquidity pools, where tension between buyers and sellers reaches critical mass. These aren't just regions on a chart. They're the market's decision-making centers. Most traders never grasp this. They believe price moves freely, like a bird in the open sky. But price is bound by structure. It moves from zone to zone, feeding on inefficiency, restoring balance, and then creating imbalance again. These zones are where the market breathes. And when you learn to recognize them, you stop chasing the bird and start reading the wind. You've probably heard people say, trade with the trend. But that statement is incomplete. You don't trade with the trend, you trade from probability zones within the trend. Because even the strongest trends need to breathe, to retrace, to refill their liquidity tanks. And where does that happen? Inside zones where probability shifts from one side of the book to the other. Let's get brutally honest. Most traders lose not because they can't analyze charts, but because they can't locate where the market is most likely to make its next decision. They treat every price point as equal. But the truth is, not all prices are created equal. There are structural zones where price has reason to react, and there are voids where it has no purpose. If you can't distinguish between the two, you'll always be trading blind. So how do you identify a probability zone? You start by understanding that price is constantly seeking efficiency. When it leaves imbalance behind, an area of strong displacement where opposing orders couldn't fill, that becomes a high probability magnet. The market tends to revisit these inefficiencies, not because of magic, but because of structural necessity. Every imbalance left behind creates unfinished business. And unfinished business is where the market returns to negotiate. Think of it like this. If the market were a storyteller, probability zones would be the punctuation marks. They tell you where the story might pause, reverse, or accelerate. They define meaning within movement. And the rebel trader doesn't just watch these pauses. He listens to them. He knows that probability lives at the edges, not in the middle of chaos. Most traders rely on signals to enter trades, indicators flashing buy or sell, arrows pointing the way. But the rebel doesn't need arrows when he understands zones. He knows that probability has a geography. It resides at the borders between liquidity and inefficiency, between trapped traders and fresh entries, between the old story and the new one being written. Every major move begins with an imbalance. Every imbalance creates a reaction. Every reaction defines a new zone. And within these zones, the law of probability isn't a guess. It's the market's structural fingerprint. When you align with that fingerprint, you stop trading noise and start trading logic. Let's make it tangible. Imagine price drives aggressively upward, leaving behind a gap, a clean imbalance between buyers and sellers. Later, as the market retraces, it slows near that same area. Why? Because unfilled orders live there. That's a probability zone. It's where the market may rebalance before continuing. Now flip the script. Suppose price sweeps liquidity below a previous low, but fails to follow through. That area becomes another type of probability zone, the rebirth point of direction. Because where liquidity is taken, intent is often revealed. The market doesn't sweep liquidity for decoration. It sweeps to collect fuel, the emotional orders of undisciplined traders. Once collected, it moves in the opposite direction, leaving them behind. The more you observe, the more you realize that the market isn't random. It's reactive. Every move you see is a consequence of a previous imbalance, and every imbalance leaves behind a map of probable reaction points. Those maps are invisible to the untrained eye, but to the rebel, they are crystal clear. The rebel doesn't enter where price looks active. He enters where probability aligns with structure. He doesn't chase breakouts. He positions near the edges of imbalance, where the market must decide. Because that's where the greatest asymmetry lies. Small risk, large possibility. That's the essence of probabilistic trading. But here's the twist. Probability isn't static. It's alive. It evolves with every candle, every liquidity shift, every structural change. What was high probability an hour ago can dissolve in minutes if structure redefines itself. That's why the rebel doesn't predict zones. He updates them. He moves with the flow of information, not the illusion of certainty. That's also why trading from a fixed rulebook fails over time, because static systems can't interpret dynamic probability. You can't hardcode flexibility. You can't automate awareness. The market is fluid. It demands real-time interpretation. And the rebel trains his eyes to read that flow, his mind to interpret that rhythm, and his hand to act only when alignment is complete. Alignment? That's the key. Probability by itself means nothing without alignment. You can have a high probability zone, but if it's not aligned with structure, it's just a trap in disguise. The rebel waits for confluence, the moment when multiple structural elements converge. Liquidity sweep, imbalance creation, market phase transition. That's when probability graduates into intent. Intent is where probability becomes purpose. It's the invisible moment when the market declares direction, not in words, but in motion. When you see that shift, when imbalance aligns with liquidity behavior and timing, that's your signal. That's structure confirming probability. That's your edge. Let me tell you something few traders ever realize. The market doesn't reward the one who knows where to enter. It rewards the one who knows when the probability is mature. You can identify a zone perfectly and still lose if you enter too early before structure aligns. That's because probability isn't fixed in space, it's activated in time. So, as a rebel, your job is not just to draw zones, but to measure maturity. You watch how price approaches. You study whether displacement is impulsive or distributive. You observe if liquidity is taken first or ignored. You interpret if volume expands or contracts. These nuances tell you if the probability is ready or still incubating. The greatest traders aren't those who predict where price will go. They're those who know where the market must react. That word, must, is structural inevitability. It's the point where imbalance demands resolution. That's the true foundation of probability zones. And once you understand this, you stop trading predictions altogether. You begin to think like an architect of risk. You build trades like structures based on the balance between probability and possibility. You no longer ask, will this win? You ask, is this structurally justified? That question changes everything. Because the moment you begin trading justification over emotion, you're no longer gambling. You're aligning with probability, the mathematical reflection of structure itself. There's a quiet beauty to it. You stop rushing. You wait for price to come to your zone. You let the market exhaust itself in randomness while you remain still, poised in understanding. And when it touches your level, when all aligns, you act decisively, without hesitation, without fear, because you've already seen the story unfold in your mind long before it reached your chart. That's the psychological transformation of the rebel. He doesn't chase probability. He commands it through patience, structure, and observation. He knows that the edge isn't in prediction, it's in preparation. Remember this. Every chart hides 3 layers: liquidity, structure, and probability. The trader who reads only price reads the surface. The one who reads structure reads the framework. But the one who reads probability zones reads the market's intent. You'll never need indicators once you understand where the market must react and why, because at that point, your chart stops being a puzzle. It becomes a mirror reflecting your level of structural literacy. And when you can look at that mirror and see clarity instead of confusion, patience instead of panic, structure instead of noise, that's when you've crossed from trader to architect, from follower to rebel. That's the blueprint of probability zones, the invisible geometry of conviction. It's how chaos finds order, how randomness becomes rhythm, and how uncertainty transforms into advantage. There's a silent truth about trading that no one tells you early enough. You never trade the market, you trade your interpretation of it. Every candle you see is filtered through your lens, your experience, your fears, your expectations. The market itself is neutral, but your lens, that's where bias lives. That's where clarity either begins or dies. The trader's lens is the invisible instrument that determines how you see structure, how you perceive risk, and how you decide to act. It's what separates the impulsive from the intentional, the gambler from the architect. The difference between two traders looking at the same chart is never the chart, it's the lens. But here's the painful truth. Most traders never clean their lens. They look through fogged emotion, through the residue of past losses, through the cracks of hope and fear. So even when the structure is clear, their vision is distorted. They don't see what the market is showing, they see what they want it to show. You've been told to trust your strategy. You've been told to backtest it, to follow the rules. But what if I told you that your greatest weakness isn't your system? It's your perception of it. You could have the most precise structure in the world, yet still lose money because your lens bends the truth. That's what the rebel understands. Clarity is a skill. Think of the market as a mirror. It reflects back your emotional state in real time. When you're anxious, it amplifies volatility. When you're greedy, it creates opportunity that's just far enough to make you overreach. When you're fearful, it gives you a false sense of safety just before reversal. The market doesn't manipulate you, it reveals you. And this is where the rebel's evolution begins. The restructuring of perception. He learns to calibrate his lens to reality, not emotion. He trains his mind to observe price without expectation. That's the discipline behind true structural reading. Let's test this. Imagine you see price consolidating just below a major high. Most traders will see accumulation. They'll expect a breakout. But the rebel pauses, he studies, he asks, whose accumulation is this? He knows that what looks like accumulation to the untrained eye could be distribution disguised as hope. He doesn't rush to name the pattern. He listens to the rhythm. The lens isn't just how you see, it's how you interpret meaning. And interpretation is dangerous when it's fueled by ego. Ego is that subtle whisper that tells you you're right even when structure disagrees. It's the lens fog that blurs data into desire. Every trader fights this. The battle between perception and proof. The old system taught you to analyze patterns. The rebel system teaches you to analyze yourself, analyzing the pattern. It's a higher level of observation, meta-awareness. You become the observer of the observer. You question not just the chart, but your own interpretation of it. You ask, why do I see a reversal here? Is it because structure suggests it, or because I want it to? That question is the scalpel that cuts through illusion, because every wrong trade begins with self-deception. A trader convincing himself that his bias is truth. The market punishes that blindness not out of cruelty, but out of structure. Structure favors clarity, and clarity favors the neutral lens. So what does it mean to have a neutral lens? It means you see without needing to be right. You interpret without attachment. You can hold two opposing outcomes in your mind without emotional conflict. That's balance. That's the rebel advantage. Neutrality doesn't mean you don't care. It means you care about precision, not outcome. You focus on structure, not result. Because when your focus shifts from profit to precision, your trading transforms from performance to process. And that's where probability begins to favor you. Not because you've changed the market, but because you've refined your lens. Now let's expose another myth. The idea that the chart gives you confirmation. It doesn't, your brain does. What most traders call confirmation is often just cognitive bias wearing a statistical mask. You find what you're looking for. You highlight only the candles that agree with you. That's not analysis. That's emotional editing. And it's the reason why so many traders repeat the same mistakes in different markets. The rebel doesn't seek confirmation. He seeks contradiction. He challenges his interpretation until it survives every logical attack. Only then does he consider it structurally valid. Because truth that cannot withstand contradiction is illusion, and illusion has no place in precision. That's why the trader's lens must evolve beyond seeing setups. It must learn to perceive environment. Not just, is there a signal, but what phase is the market in? What story is unfolding? Because every structure has a beginning, a middle, and an end. If you don't know which chapter you're in, you'll misread the story every time. Let's say you're in a trending market. The candles are expanding, momentum is strong, liquidity is driving price in one clear direction. The average trader sees continuation. They enter without question. But the rebel sees exhaustion building. He notices how each impulse is shorter, each retracement deeper. He reads fatigue in the structure. His lens interprets the tone of the market, not just its direction. That's what separates mechanical trading from structural reading. The mechanical mind reacts to signal. The structural mind listens to tone. And tone is what tells you when structure is about to shift. Tone lives in the micro details. The wicks, the failed breaks, the slowdown of displacement. It whispers when momentum fades and screams when liquidity shifts. Most traders miss these subtleties because their lens is tuned to patterns, not behavior. But the rebel listens differently. He doesn't need the market to tell him what it's doing. He can feel what it's becoming. And that's when trading transcends execution. It becomes observation as art. You stop needing signals because your lens is the signal. You can sense misalignment before the chart reveals it. You can detect deception before it manifests. You can read the intention behind price, not just its motion. But this mastery demands constant refinement. The lens gets dirty every day, with ego, fatigue, frustration, greed. That's why the rebel practices cleansing, reviewing trades, journaling thoughts, dissecting mistakes, not to punish himself, but to polish perception. Because a trader's clarity is his capital. Lose one, and the other follows. Every loss is feedback. Every win is proof of alignment. Both are mirrors. The difference is how you interpret what they show you. A mature lens doesn't glorify wins or fear losses. It studies structure. It learns from patterns of behavior, not just outcomes. There's a moment when a trader, after years of chasing signals, finally pauses and realizes, the market never lied. It was my lens that did. That realization is both humbling and liberating, because from that moment, he stops seeking control and starts seeking clarity. He understands that trading isn't about predicting candles. It's about perceiving intention. That's when the rebel emerges, the trader who has shifted from reaction to creation. He no longer waits for clarity, he builds it. He doesn't look for opportunity, he designs alignment. His lens is no longer a filter of fear, it's an instrument of precision. And you, listening to this right now, maybe you're realizing that your greatest edge won't come from the next strategy, or the next mentor, or the next signal service. It will come from within, from how you see. Your chart will always reflect your level of inner structure. If you're chaotic inside, your chart will mirror confusion. If you're intentional inside, your chart will reveal design. That's why I say, the market doesn't reward intelligence, it rewards alignment. The clearer your lens, the cleaner your execution. The cleaner your execution, the higher your probability. Everything connects back to perception. So the next time you open your chart, don't rush to find a trade. Find yourself first. Ask, what am I looking for and why? Am I seeing the market or am I projecting my hope onto it? Is this setup clear or am I forcing clarity where there is none? Those questions are the true entry signals. And when your answers are honest, your chart starts speaking truth. The same price action that once confused you begins to narrate itself. You start noticing alignment you used to miss. You start feeling the structure breathe beneath the candles. That's the transformation of lens, from blindness to insight. Because at the end of the day, every successful trade is born from clarity, and clarity is born from structure, not the market structure, your own. The more disciplined your perception, the more predictable your decisions. That's the power of a refined lens. You stop fighting the market and start conversing with it. You stop chasing trends and start interpreting them. You stop needing certainty because you've mastered understanding. And that, my friend, is the lens of the rebel. Intentional, structured, and awake. There's a strange tension that lives in every trader, the gap between knowing what to do and actually doing it. You've studied the charts, you've marked the zones, you've seen the setup unfold, yet somehow, when it's time to execute, something fractures. You either hesitate when you should act, or you act when you should wait. That fracture, that disconnection between structure and action, is where most traders die. Execution is not about pressing buttons. It's about the synchronization of three structures: perception, probability, and timing. When those three align, execution becomes effortless, not emotional, not forced, but inevitable. That's the essence of alignment, when your internal rhythm moves in harmony with the market's external rhythm. Most traders think they need more discipline, but discipline without design is punishment. Execution alignment isn't about forcing yourself to obey rules. It's about creating a structure where obedience becomes natural. The rebel doesn't fight his impulses. He designs around them. He builds systems that make alignment automatic, not heroic. Let's start here. Every action you take in the market is either reactive or intentional. Reactive actions are driven by emotion, fear of missing out, fear of loss, greed for confirmation. Intentional actions, on the other hand, are born from premeditated structure. You've already decided what qualifies as an entry, where your invalidation lies, and what defines completion. When the market fulfills those conditions, your action is not a choice. It's a response to alignment. But here's where it gets profound. Most traders don't actually fail because they lack knowledge. They fail because they act in misalignment. See probability forming, but fail to wait for confirmation of structure. They see structure forming, but misjudge probability. They enter when emotion peaks, not when logic aligns. And every misaligned action compounds not just losses, but psychological fatigue. You can't execute correctly if your nervous system doesn't trust your structure. That's the silent saboteur, distrust. You've been betrayed too many times by your own impulses, by strategies you didn't fully understand, by trades that looked perfect but weren't aligned. So now, even when a real setup forms, your mind hesitates. You freeze, not because you don't know, but because you don't trust. Execution alignment then begins with rebuilding that trust. It's not the market you need to trust. It's yourself, your process, your patience, your principles. The rebel rebuilds this trust by anchoring execution to procedure, not emotion. Every trade becomes a test of structure, not self-worth. That's the difference. Let's break something open. You cannot execute what you have not rehearsed. Precision in real time is born from repetition in practice. Alignment isn't achieved through motivation. It's achieved through modeling. The rebel trains like a pilot. He rehearses execution before the storm. By the time the turbulence arrives, his hands don't tremble because his system has already accounted for it. That's why journaling isn't optional. It's a mirror of your alignment. Your journal isn't just a record of trades. It's a map of your behavioral patterns. It shows where emotion hijacked execution, where timing betrayed patience, where clarity dissolved into confusion. The rebel studies that map religiously, not to glorify wins, but to isolate misalignments. Because every misalignment you ignore becomes an invisible tax on your consistency. Think of alignment like tuning an instrument. Every element, entry, stop, target, timing, must be in tune with structure. If one string is off, the entire melody sounds wrong. The average trader plays noise. The rebel plays rhythm. But here's what most traders never understand. Execution is a structural ritual. It's not a moment of bravery. It's a moment of obedience to design. You execute not because you feel ready, but because structure demands it. You don't hesitate because your emotion disagrees. You act because your design agrees. That's the sacred difference. The mind loves to delay. It whispers, wait for confirmation, even when confirmation has already occurred. It tempts you with safety, disguising fear as logic. But the market punishes hesitation just as it punishes recklessness. Alignment is the balance, the perfect midpoint between patience and precision. When you are aligned, your entries feel calm. You're not chasing, you're not doubting. You're executing like an architect placing a final stone in a structure he already designed. You know where your invalidation lies, so you no longer fear being wrong. You know where your target lies, so you no longer crave to be right. The emotion dissolves, and only clarity remains. Execution alignment isn't just about timing, it's about state. Your nervous system must mirror your model. That's why I tell traders, your execution will never exceed your emotional regulation. If you're tense, rushed, or distracted, your actions will always drift toward misalignment. You can't build precision on emotional chaos. That's why the Rebel designs rituals, pre-trade routines that align physiology with intention. Breathing before entry, reviewing structure, reaffirming invalidation. It's not superstition, it's synchronization. You're telling your mind, we act when we're in structure, not in stress. And over time, your body learns, your heartbeat slows, your breath steadies, execution becomes rhythm. The old trader fights himself, the rebel flows with himself. He knows that trading is not war, it's orchestration. The market doesn't reward aggression, it rewards harmony. When your perception, structure, and timing align, the market feels predictable. Not because it changed, but because you did. Let me give you a picture. You're watching price approach a liquidity zone. You've seen this sequence before. Sweep, displacement, retest. Everything aligns. Your cursor hovers over the entry button. That pause, that heartbeat of hesitation, that's where alignment is tested. Do you trust your model enough to act without reassurance? Or do you wait, needing more confirmation until the move leaves you behind? That's the defining second between being an observer and a rebel. The rebel executes, not out of confidence, but out of conviction. Confidence is emotional. Conviction is structural. Confidence says, I think this will work. Conviction says, this is what structure demands. And that mindset shift changes everything. Once you align conviction with structure, execution becomes identity. You no longer have to try to follow your plan. Your plan is who you are. Every decision reflects your design. That's the peak of alignment, when you and your model are indistinguishable. Most traders spend years chasing entries, tweaking systems, switching strategies, but the real breakthrough happens not when you change your model, but when you align with it, when your execution becomes the physical extension of your structural philosophy. You begin to feel timing differently. You stop chasing signals because you can feel when the market is ready. You can sense when structure is maturing, when liquidity is baiting, when momentum is exhausting. You execute not from urgency, but from understanding. And that's the quiet power of alignment. It makes execution peaceful. The irony? You become less active, but more effective. You trade less, but win more. Because alignment filters out noise, impulsiveness, and insecurity. You're no longer seduced by setups that look good but feel wrong. You can walk away from trades without regret because you're no longer trading to prove something. You're trading to express structure. That's what mastery feels like. Not excitement, not adrenaline, but calm precision. The rebel doesn't celebrate entries. He celebrates alignment. He knows that when alignment is consistent, results take care of themselves. So, when we talk about reading the market without signals, this is what it really means. You've trained your eyes to see structure, your mind to interpret probability, your emotions to remain neutral, and your execution to align with all three. That's full spectrum awareness. That's the pinnacle of intentional trading. And maybe right now as you listen, something clicks. You realize that the problem was never the market. It was the disconnection between your analysis and your action. You've been seeing right but acting wrong. The solution isn't to learn more setups, it's to bridge that gap through structural alignment. You start small. You define what alignment looks like for you. Clarity before entry, confirmation of intent, no emotional pressure. You build rituals to maintain that state. You document every misalignment, not to judge, but to learn. You refine your environment. No distractions, no emotional noise. Every step intentional. Over time, alignment becomes habit. Habit becomes instinct, and instinct becomes art. You no longer trade to survive. You trade to express the architecture of your understanding. That's when trading stops being performance and becomes presence. You are no longer a participant in the market's chaos. You are a conductor of your own design. That's execution alignment, the seamless flow between structure and self. And that's what defines the rebel. He doesn't just follow rules, he embodies structure. He doesn't react to probability. He creates alignment, and in doing so, he transforms trading from chance into choreography. So the next time you feel hesitation creeping in, breathe. Remind yourself, if the structure is right, execution is not a question, it's a response. You're not trying to force the market to obey your will. You're allowing your discipline to meet its design. That's harmony. That's mastery. That's alignment. And if this message resonates with you, you already know what to do. Subscribe. Share this with another trader who's ready to trade intentionally. Drop your reflections in the comments, and let's continue building a community of structured minds, not emotional followers. Because this isn't just trading, this is rebellion by design. You are part of the few who refuse to chase the market's illusion. You build clarity, you command structure, you trade with intention. Welcome home, Rebel.